So, JPMorgan dropped a bombshell forecast for silver. They're seeing an average price of around $81 in 2026, even predicting it'll hit a peak of $85. But what if they're being too conservative? It's not that their models are wrong, it's that they might be underestimating just how explosive the situation on the ground really is. The data points to a rally that could make $85 look less like a peak and more like a launch pad. Here are 5 signs that the real story for silver is far more bullish than even JPMorgan is calling for. First, the China factor. While there isn't a new dramatic export ban on silver, let's be clear about that, China's behavior with other critical materials is a huge red flag. They've already put export controls on things like gallium and germanium. With silver being essential for their solar and tech industries, what's to stop them from tightening the leash on silver exports, next to protect their own supply? That geopolitical risk isn't something you can easily plug into a spreadsheet. Second, the widening supply deficit. This isn't speculation. It's a reality the market is already facing. The demand from the green energy transition is relentless, and for years, mine supply has been struggling to keep up. The world needs more silver for solar panels, EVs, and electronics, and that fundamental gap between supply and demand is only getting wider. Third, the strain on physical supply. We've seen it before, and the tension is building again. While the paper price on an exchange can be volatile, what really matters is getting your hands on the actual metal. When big buyers start demanding physical delivery, it puts immense stress on the system. Any significant move by large players could expose just how thin available inventories truly are. Fourth, dwindling stockpiles. Speaking of inventories, the amount of silver sitting in exchange vaults like the COMEX has been trending down. This isn't an overnight collapse, but a steady drain. It's like a slow leak that eventually causes a major problem. As available, stock gets tighter, any shock to supply or spike in demand gets amplified. Fifth, the return of investor demand. Let's not forget silver's other role, real money. For centuries, it's been a safe haven. With concerns about inflation and currency stability always simmering in the background, a new wave of investment demand could pour into silver, competing with all that industrial demand. It's a classic dual threat that can catch forecasters off guard. So, while JPMorgan sees an impressive run to $85, these signs point to a much more volatile and explosive setup. Their analysts even admit the ultimate ceiling is uncertain. What do you think? Is an $85 peak a reasonable target, or is the combination of these factors setting us up for a much bigger move? Drop your thoughts in the comments, and if you want to stay on top of what's really moving these markets, make sure you subscribe.